Yo, I am hideous. Oh my god, yo. I need a cut, yo. What the fuck? My shit look crazy. Anyways, daily bias. Today I'll be going over daily bias to show you guys how to have a narrative for the day. If you see me blinking a lot, don't fucking mind your business, my nigga, because my shit is overly dry for some reason again. But daily bias, today you guys will learn how to put it all together and how to have an idea of where the market is going to go for that day and how to have an overall target and a directional bias of where your trades will generally be for that day. And as I say that, I also want to say that even though you have a daily bias, you do not want to be married to your bias. You want to adapt. You want to be a chameleon in the market. And if it's telling you something else that is different from your bias, don't be afraid to change up your idea, your narrative, and just your trading ideas. And also, even though you have a bias, you can take trades in the opposite direction, but majority of the time you want to stick to that bias if there's a significant liquidity point that you're targeting or a significant, or you just have overall conviction into where you think the market is going to go. Let's get right into it. So I'm just gonna break it down how I go through the shit. So first, if it's like Monday or the 4 hour and 1 hour is not that clear, I start off on the daily chart. Even though this is rarely what I do, but majority of the time I'll start off in the 4 hour. So daily chart, as you can see, daily chart's not too clear. Not too clear. I'm gonna go back to last Monday. Or was it this was this Monday? Or this was last Monday, I mean. So like for example, I'll see, okay, on the daily chart, we just rejected. It's just like using a culmination of all your concepts on a higher time frame, but you're just not entering off this. So the same way you would find a lower time frame entry is the same way you would find your daily bias where you think the market's going to go. Right? We have relative equal lows above. Relative equal highs above here. Okay, so I'm thinking, okay, that's a good place to target. We also have, oh shit, don't even. We also have this gap up here, which is this is called a new day opening gap. I'll probably make a video on this. I don't really use it too much, but it's definitely a good target to have. New day opening gap, which is just, or new week opening gap, either one, new week NWOG or NDOG. The start of the day you'll often see, or the start of the week you'll often see a gap just like this, and these are often going to be targeted to get filled. So I have my targets, these relative equal highs, this NDOG, new day opening gap. I see it's respecting this little fair value gap on the daily. Then I scale down to the 4 hour. What do I see in the 4 hour? I see nothing. I mean, I see that I do see that it just swept this low right here and it's showing me somewhat of a rejection, right? So you see there's a liquidity sweep on the 4 hour. We didn't respect this gap, but we did sweep this liquidity, making this a good rejection area. Then I go down to the 1 hour. What do I see in the 1 hour? I see, okay, boom, we just inversed here. This is a hard area to give a bias if you're just starting out. Let me skip to today so it makes it more understanding. Okay, what was today? I forget what I was today. Oh, I was bullish today. So boom. This is perfect right here. Okay, so when I went into the day today, what time was it? Right here. So I was looking at this candle. So imagine it's 8:30 a.m. You just woke up, you're looking at the charts, you want to form a bias for the day. So we still have NDOG above. Oh no, we tapped in the NDOG already, but we still have those relative equal highs above on the daily chart. Right, we still have those relative equal highs. And then when I drop down to the 4 hour, it gets a little bit more clear, right? Okay, boom. We're rejecting this 4 hour gap, showing strong rejection. 2 candles that are wicking out of this gap. So I'm leaning towards bullishness, right? Leaning towards bullishness. Okay, what time is this? This is a 5 a.m. candle, so I wouldn't be on the charts by now. 8 a.m. Okay, boom. 8 a.m. candle opens up. So I see that we rejecting this 4 hour gap. We swept these relative equal lows down here. It's just the same thing. Same thing. If you guys watch my videos, it's the same thing as entering a trade when you're finding your daily bias. You treat it the same way. You use the concepts that I taught you, and you just apply it to the higher time frame to frame your bias for that day. We just inverse this gap. We inverse this gap. We created this order block right here. And when did we create this order block? Once we closed above here. So we created this order block right here. This black candle is the order block. So we could treat this as an order block. So now we have a bullish order block. So we know if this gets respected, if this shows support in price, we're even more bullish. So we see this order block. It's 8 o'clock. I'm on the charts around this time. Okay, we obviously, so I'm on the charts at 8:30. So we see that, let me go back. So we see this order block right here. So we know if we're bullish and your bias is correct, we should have some sort of respect to this order block right here. Where's the fucking, oh. This is the order block. And when did we create the order block? Once we close above this area. Even though it didn't sweep liquidity, even though it was probably on the lower time frame, it swept this low right here, but still considered an order block. And we inverse this gap, so we should somewhat tap into this order block and move higher if we're bullish. So that's when we go into the lower time frame, and so now you have a bullish bias because, okay, even though it's not for sure, we tapped into this gap. On the 1 hour, we inverse this fair value gap. And now we have a bullish support system. We have an order block. And now we know if this gets respected, it's even more confluence to be bullish. So now that's when you drop down to the 1 hour, the 1 minute or whatever time frame you want to trade or whatever time frame you feel comfortable on. You know this black line represents the order block. So if we come down here, we should somewhat respect this area. So then what I like to do is I like to open up the 1 hour to kind of just show me what the fuck it's doing. Oh no, but this is replay, so you can only have one chart open at a time. So let me just keep it right here. So then I look like, okay, boom. Now I'm looking like I want to see something that comes out of the. Okay, so you see how cleanly we tap this order block and we get a clean rejection off that order block, right? Because this is the line that I marked out. The clean reject, there's no entry model, but you know your bias is correct. Clean rejection off this order block. Now you know this is showing really bullish confluences, right? Because we're respecting the order block, we violated the fair value gap, and now we're moving up with some speed without any sort of moves in the opposite direction. We're respecting lower time frame fair value gaps. Boom, like you can see right here, this fair value gap is respected heavily, just showing you even more bullish confirmation. Even this little fair value gap right here gets respected. So it's just showing you bullish moves. And so since it's showing you bullish moves, you want to remain bullish, especially before a high is getting taken out. You don't want to take any, even though your entry model might show up, in the opposing direction. If you have a high conviction in that it's bullish and price is showing you that it's bullish, those models have a low ass win rate, and those are the setups you don't want to take. So I'm looking at the charts right now and I see it's clearly targeting this high up here. It's moving with some high speed to this high up here. So I know I do not want to take any shorts before this high is taken out. Even if a short presents itself, a short inverse fair value gap, I do not want to take it because remember, inverses is not what runs the market. That's just what puts you in the market. It's liquidity that trumps everything. Regardless if your entry model shows up, it always is going to target the liquidity. It could show you an entry model in the opposing direction. You do not want to take an opposing direction inverse because you can't control yourself. Even you don't want to be a pattern trader. Remember, it's always liquidity. You want to be a liquidity driven trader. You do not want to take a trade just because you see a pattern that you've seen work before for a trade and it works a lot of the time, but if it's not in the direction of your bias, you are taking a pattern trade, and those do not have a high win rate. So you want to wait until your entry model shows up in the direction of your bias. Okay, now then once that high gets swept is when you want to adjust, right? Because we know, okay, boom, we swept this high. Now shorts could be somewhat valid because we just swept this high. Now I want to look for some sort of rejection. We have a fair value gap up here on the 1 hour. So if I'm on the 1 hour, obviously I'm not going to take a fucking 1 hour short. But at my higher time frame bias, I see that we just swept a higher time frame high on the 1 hour. We tapped into a 1 hour fair value gap. Now I still want to remain on the 1 minute to look for my entry model, which is the IFVGs. So then you're like, okay, we tapped this fair value gap. Let me see if I can get an entry model to the downside. Maybe some little 30-second shit. Maybe, who knows? Let's see. I don't remember the trade I took today, but now we get some accumulation up here in this fair value gap. We can get a rejection out of this fair value gap and get an entry short. Even though my bias was originally long, since we have a potential short because we're showing some bearish confluence because we're now in a higher time frame bearish gap, right? So we want to remain patient and wait for a good setup. Now I see a good bullish gap. Now if I know if it gets inversed, I have a lot of liquidity resting below here. Like boom, all these relative equal lows. Now I know if this bullish gap gets inversed, it wants to at least come to these lows. But if it doesn't, then I sit on my hands and wait. So what is it doing? It's not inversing. It's not inversing, right? Okay, boom. Does that inverse? Nope. Nope. Let's see what we can get. Now, see this is the gap. Remember, the higher time frame, your bias. We're in a 1 hour fair value gap. So you most likely do not want to be longing, considering we took out the high, the point of interest for the day. We took out this high. We're in a fair value gap. We're in premium of this range. Remember, put all the concepts that I've taught you together, but don't try to overanalyze it. Fuck. We're in the premium of this range, right? This range right here. You guys remember ranges. So we see we're in a premium. We're in a fair value gap on the higher time frame. We just swept this high. Even though I was bullish originally, now I'm looking bearish because now we're in this 1 hour gap. Now I want to see something short because we're in a premium of the range. Okay, now let me look for something cleaner than this. So I'm looking for shorts. I'm feeling shorts right now. Oh shit, this is my trade right here, I think. Now I see, okay, I'm on the 30-second. This shows up on every time frame, so don't try to rush and try to trade the 30-second. So you see this will show up on the 1 minute, 2 minute, whatever it is. But this is just an example for today because it was clean, right? We see this fair value gap right here. Now I know I'm short, so I want to look for shorts. We swept this high. We swept liquidity. Again, I'm going to show you guys again because this is daily bias. We're rejecting the 1 hour fair value gap. We just swept this high up here. We're in premium in the range, so I'm leaning towards shorts. So now everything's aligning short. So I'm looking for an inverse to the downside and targeting some sort of lower time frame liquidity, right? We have a lot of liquidity down here to get swept. But I don't need, you can target down here, but I don't need to hold all the way down there. I just need to get my money and get the fuck out the market, right? So you wait. You see if there's some sort of entry to the downside. Boom. Boom, okay. Boom. Now we get an entry, right? We enter here. You're risking about, how many points is this? You're risking about 10 points, right? So 10 times 2, 20. So you want to risk about, I risk about $200. So you want to sell about 10 contracts. You could target any low you would like. I like to go for 1-for-1s right now, just due to the market being a little choppy and volatile because Trump's in office. So I'll go for a 1-to-1. Mind you, you do not have to do this. You could target much lower targets. But if you're a beginner, I would go for 1-for-1s just to try to get used to it. You can target all the way down here. But 1-for-1, my model, because you have to have a higher than 50% win rate to be profitable using 1-to-1s. Boom, right? 1-to-1. Let me put my TP down here. Target a 1-to-1. Boom, just like that. You're out the trade. Now you can try to hold it. As you can see how powerful IFVGs are. I'm not sure. I don't remember if it goes all the way down here. But it's just the start of the whole move, right? You just get all of it. Like, this could have been your main liquidity target right here. This low. Boom, 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 boom. Come on, my nigga. You could target all that shit. As you can see, it just is instantly. That was the start of the move. See, if you guys just have to follow your higher time frame bias to be in alignment. As you can see, there'll be models that will be in the opposite direction of what you want, but will not work out. Like, let me see if I could show you something in 1 minute that doesn't work. Oh, perfect. Right here, for example, like you don't want to just blindly take longs up here after we tapped into a higher time frame fair value gap, right? So we see this. Okay, let's say you're still long because you're married to your bias and you're not realizing the market is adapting, and you have to adapt with the market, right? So we see that we're in a higher time frame fair value gap, but you're still so stuck on longs because you've been waiting for longs all day that your ego's gotten in the way. And so your daily bias is telling you, okay, let me go long because you're stuck to it, even though you should be adapting to look for shorts now. Now you'll long this with the target. You see, okay, we have equal highs above. These should get hit, right? We have equal highs above. If this gap gets violated, I'm taking this target. We're respecting this fair value gap. But remember, that's not aligned with your bias, right? Even though this setup looks fucking amazing, right? You buy 10 contracts or you're risking about 10 points. Now you know if it closes below here, you're out of the trade. But this is your TP, right? You're like, okay, this looks since you're being a pattern trader, this looks fucking A+. So now you're like, okay, let me see what we working with. Okay, should get hit. No, dickhead. Now you're down $400 because you want a pattern trade. You don't want to stay in alignment with your bias. We just tapped into this fair value gap. Price is rejecting that fair value gap. We don't want to take longs into the fair value gap while we're in a fair value gap. That's a perfect example of why it doesn't work. Rather, take shorts where you could see you want to be looking for shorts because it's a more probable setup, right? So we see this is something you guys probably wouldn't see as right now, but we just see this 30-second gap right here. We swept this intermediate term high right here. Now I want to look for shorts, right? Look for shorts. Okay, boom. We just We inverse this gap. I'm gonna target this low. I want to sell. Boom, boom, boom. See? Bang. This is probably a SMT right here, but you get the point. You want to be looking for shorts because shorts are much more probable when it's in alignment with your bias, or whatever. Shorts or longs are much more profitable when it's alignment with your bias. Yeah. Also, remember equilibrium. Remember premium and discount, like I talked about in other videos. Make sure to include that into your daily bias, because you don't want to be longing in a premium, right? If on the 1 hour, like this is the range for today, right? Above here, above equilibrium, you do not want to be longing up here, especially if there's gaps that we're in. You want to be looking for shorts, because the market makers are gonna want to be looking for shorts. You want to be in alignment with the market makers. You want to look for shorts. You want to look for stuff to the downside. So in order to find your daily bias, remember, you want to look for premium or discount of the range. If we're in a premium, you want to be leaning towards shorts. If we're in a discount, you want to be leaning towards longs. Remember, you have to use other stuff in confluence. So if we're in a 1 hour, right? We see this huge range. We're in a premium. We see we're in a fair value gap. Multiple confluence. We see in a fair value gap. We're respecting the fair value gap, and we're in a premium. So boom, I'm confident in my shorts. Like right now, for example, like let's say it was 8 a.m. right now. What I would see is we're rejecting this fair value gap. There's another fair value gap right here that we're respecting. So right now I'll be looking for shorts right here. As you could see, shorts are looking pretty good, right? We're looking for shorts. No longs, because we're in a premium and we're rejecting a fair value gap. Should make sense. Any questions or concerns or anything regarding the Discord, just hit me in the Discord. Yeah. I hope you guys are watching these videos. I know not too many people are watching these shits right now, but it just shows you not as many people want to put in the work as they want to, even though they say they want to put in the work. If you're watching this shit right now, I salute you, brother. If you watched all RTB videos or any trading videos and you've been consistent, I salute you. But if not, just skipping through that shit, nigga, lock in, bro. Because this shit, it's not going to work if you just half-ass this shit. Hopefully this message goes to somebody, because half-assing this trading shit is just not going to work. And the results will show. It will show every single day. When you hop on them charts, you might have a winning day, you might have a losing day, but if you haven't put that work in, you'll have more losing days than winning days, and I guarantee you that. Trust me. Been in this shit for a couple years now, and I know what it takes to get to that point. So love the process, follow the process, fall in love with the process, and trust it. I know this shit probably feels fucking confusing right now, my nigga. But over time, it will get clearer and clearer every single day. Trust me. It probably seems like, damn, this shit feels far away. I'm not even really making any progress. But trust me, if you're consistently watching videos, if you're consistently just diving into just content regarding trading and just taking in and fucking you're just being a sponge with trading. Make sure you get Twitter. Make sure you're on Twitter constantly, just hearing what people are saying. That's another suggestion. Get the fuck on Twitter, bro. You will learn a lot of shit on Twitter. Follow everyone I follow. Make sure you follow everyone I follow. Make sure you follow me, of course. And just scroll through that shit through your days. You'll learn a lot of shit, bro. No cap. You'll see little concepts that people talk about, and it will lead you into a rabbit hole of trying to understand that concept. And all knowledge is good knowledge in trading, right? but you don't want to overcomplicate it. But you still want to be a sponge, and you still want to take in all the knowledge you could. So make sure you download Twitter and make sure you scroll on that shit. At least like I used to scroll on that shit like an hour a day, just looking at people's executions, looking at people's trades, understanding why they took the trade, looking into their explanation of their trade, looking at their account, looking at their other trades. Then next, boom, now you're scrolling. Now you see some other shit, and now since you got an understanding of that person's content and why they took that trade, now if another dude is talking about it, now you understand it because you just did some research and you just get an understanding of why people are using this concept, why people are using another concept. But just make sure you're being a sponge and make sure you're just getting understanding. Don't just dedicate 15 minutes a day to this shit, because then that shit's never gonna work, bro. Take you way too damn long. You gotta put in more work. But hopefully somebody watched this shit. Hopefully this resonated with somebody. But just stay locked in, bro. I'm telling you, if you needed a sign, this is your sign right now that this shit will work out. And if you're having any doubts, just stay with it, bro. Trust me, bro. Trust me. Just stay with the shit. If you needed a sign, this is your sign right now. If you've been asking for signs, this is your sign right now. This shit will work, and you will make it somehow, some way. You just gotta stick with it. You can't give up. If you've been feeling like giving up, stop being a bitch ass nigga. Fuck is you talking about? I'm out this bitch, nigga.